Good morning, everybody. For those of you just joining, we're just going to pause for a few moments to allow everyone to fully join the call. Please just bear with us. Good morning, everybody. Just to repeat, we're just going to allow a minute or so for those joining the call to get settled, and we'll start as soon as possible. Thank you. Okay, well, good morning, everybody. A warm welcome from Barclays, BDO and Analytica. Thank you for taking the time to join us this morning for the launch of the 2024 Logistics Confidence Index. Today's call is recorded, but we are live right now, and I'm really looking forward to being able to introduce you in a few moments to our panelists and guest speakers. I'm James Lean. I'm an Industry Director for Transport and Logistics at Barclays, and I'm just one of a really large team, actually, that's worked for quite a few months to bring together the report today. Our aim each year, and this year is the 12th, is to get the views of over 100 business leaders across the sector, bring all of those views together and help share. This actually starts with a really interesting part of the process, which is some roundtable dinners, which we host nationally all over the country. And hopefully you get an invite from either Barclays or BDO to join. In that dinner, it's a great opportunity to talk about the sector, not just reflect on the previous year, but take the temperature of where we are now. That really helps us to start building the questions and looking forward to the next stage of the process. We then go out and we try and take the survey. So the survey is a formal part of the process, happens in July and August. We get a spread of views from SMEs to global corporates and from each part of the sector, because we know this is still quite a diverse industry. And the last month is really quite intense. So it finished with a late one yesterday, trying to get all the report together and the facts and the figures and aggregate it. Firstly, so that it's interesting and short, because we know that time is stretched for all of you. But certainly so that it appears without skew. It really is your insight that matters, and we want to represent that in a fair and verbatim way. So looking at the agenda today, I'm going to be introducing you in a moment to Nikki Barrington, a Relationship Director at Barclays for Transport and Logistics. Nikki's going to take you through the survey findings in detail. There's quite a bit to go through in the report, but Nikki's just going to stick to some highlights today. Jason Whitworth, Partner for M&A and Lead for Transport and Logistics at BDO, is then hosting a panel discussion with David Mulligan, CFO from DX, Andrew Austin, Chief Quality Officer from Priority Freight, and Chris Welch, MD for Welch Group. We are looking forward to getting into that. It will be for about 30 or 40 minutes, so we've got a big chunk of Q&A. There's also an opportunity on your screens to submit questions via the Q&A panel. So please do so, and you'll be helping out Jason there in terms of hosting the debate. And hopefully a couple of surprise questions for the panelists that they haven't been able to prepare for. We'll get onto that in a moment. So let me introduce to you and reveal the 2024 Confidence Index number. 57.6. We were all really pleased to see the result of 57.6 and have been looking forward to, for the last month, being able to share this with you. Sentiment has really bounced back from 47.3 in 2023, but still some way off the highs of unbelievably 71.4 looking back to 2014. Did we know we had it so good back then? Maybe not. But I think this 57.6 is a stark contrast to last year. It really does fill you with a good degree of confidence. But I think it's cautious optimism. It's a sense of realism that whilst the industry is looking to growth, that it's still got one eye on what's happening out there. It doesn't seem like a whole lot's changed. So perhaps this is a nod to a degree of stability, perhaps, an acceptance perhaps of challenges, both home and abroad, and the resilience of the sector to be able to deal with those and navigate around them. One of the standout points for Jason and I this year was the rising need for strong succession plans, and future leaders was really standout in this report. We've all, regardless of industry, got a lot to deal with in terms of the route to and the transition to net zero, decarbonisation, the adoption of AI and increasing IT demands, but also in developing our people. Those individuals, those future leaders need to be highlighted, coached, developed and given the empowerment to be able to lead the sector as it goes forward. I know I speak on behalf of Barclays BDO Analytica when I say I'm really proud to support this critical sector that underpins UK PLC. So Nikki, over to you to take us through the results in detail.
Thank you, James. And just to add, we are welcoming questions. So we will be moving on to, as James mentioned, a panel discussion, and therefore please do post your questions in the chat function and we'll come to those as part of our panel discussion. But in terms of here and now, so I'm going to walk you through the survey findings. And I'm Nikki Barrington, so I'm a relationship director, as you can see on the screen, in the transport and logistics team at Barclays. And I've been with the bank for 12 years, which is incidentally the time we've running the LCI. Now, James has shared the key headlines, and I'll go into more detail over the next 15 minutes or so to talk you through what you have told us in terms of the outlook for logistics businesses, the challenges ahead, and some of the strategic opportunities too. And a huge thank you to those of you who've been supporting the index for all these years, including a number of my own clients, and a big welcome to those of you who are joining for the very first time. Moving on to the next slide, and in terms of sector breakdown. So as always, there are some interesting variations underpinning the increased overall confidence, depending on the nature, size and scale of respondents' businesses. Now, as you can see from the graph, the highest confidence score by subsector by some distance is amongst temperature-controlled logistics providers at 64.9. Conversely, freight forwarders are again reported as the least confident category of logistics subsectors at 55.7, albeit it is higher than the 44.7 reported for freight forwarders last year, with some recovery seen across freight rates and normalisation of volumes. Also in line with last year, and in fact pretty much every year since we've run the index, firms based in the north are more confident than those in the south. And this echoes some of the conversations I've had with my southern-based clients, whereby driver shortages have been felt most acutely and driving up costs as a result. We see higher confidence for UK and Ireland versus global operators, which could be associated with reduced exposure to the increasing complexities and indeed costs of cross-border trade. And of course, we're still feeling the impact of Brexit, a word that we never seem to be able to get away from, but one participant commented on Brexit having caused major problems for cross-border operations, which they still say they are slowly overcoming. Higher confidence is reported amongst smaller businesses versus those larger ones, which could be attributable to lower cost bases and speed of decision-making. And lastly, with a result of 59.2 for those with asset-heavy business models, there's clearly greater positivity on this side of the industry, which interestingly was the other way around last year. And what we have seen is that operators this year have reported improving vehicle utilisation and looking to extend the life of vehicles in order to reduce renewal costs, with profitability as ever a key focus for businesses, which we'll touch on the next slide. So moving on to business conditions, indications are that logistics leaders are more positive about the next year than they have been looking back over the last 12 months. While half, or strictly speaking 52%, of operators said business conditions were the same or more favourable now than 12 months ago, looking forward to the year ahead, this number increases to 82%. With CPI printed at 2.2% rise in the 12 months to August 24, which is unchanged from July, this may be driving expectations across the sector for labour, fuel and energy costs to stabilise, and we hope for consumer demand to increase as the economy moves in a more positive direction. Of course, the future sector sentiment is likely to be impacted by the broader economic outlook, noting we'll get a better idea of what this looks like when Rachel Reeves delivers the autumn statement to Parliament and, of course, the people on Wednesday, the 30th of October. I'm sure the press are already working on their best Halloween puns. There are, however, some signs logistics leaders are more upbeat about the year ahead, with positive news, as you can see from the slides, on both turnover and profit expectations for the next 12 months. Albeit roughly a third of logistics businesses expect no change to profitability. This less bullish response on profit perhaps reflects the cost of assets and energy above inflation, together with resistance from customers to increase pricing. Our respondents also pointed towards the importance of regular and accurate monthly management accounts. And of course, as a banker for Barclays, I would certainly agree. Now, moving on to challenges. Customer price pressure is always a concern in this fiercely competitive sector, and this year takes top spot as the biggest challenge for the year ahead, cited by 68% of respondents. It replaces concerns over changing volumes, which slips to second place at 50%, and is significantly less marked concern than in 2023. Perhaps this is no surprise, given reduced volumes reported by many firms, concerns around staff shortages and indeed increased labour costs continue to ease, down from just half of respondents in 2023 and pretty much all, 98%, in 2022. The sector's well-documented talent and skills gap is a perennial one, with a number of respondents commenting that this will likely come to the fore again as when consumer sentiment improves. A marked rise in the number of logistics operators worried about supply chain disruption, up 13% compared to 2023, also comes across a backdrop of the war in Ukraine, growing conflict in the Middle East, and other geopolitical threats. While a challenge for some, it's important to recognise that supply chain disruption could amount to increased business opportunities for other providers, particularly those within expedite freight. We'll now look at the strategic opportunities for growth. Now, when asked about strategic priorities to achieve growth in the next 12 months, two choices jointly topped our list: increasing market share in existing markets and cost control. A number of respondents noted international investment in geographies such as Eastern Europe and Northern Mexico, as their respective customers set up in lower cost regions. Onshoring and nearshoring are phrases that are well used in the sector. However, I wanted to share with you a new phrase that I came across last week, being friend-shoring, which apparently is nearshoring in a friendly jurisdiction, something that we're told we can expect to see more of in the coming years. Now, greater collaboration with customers, suppliers, and/or other providers is also seen as an important growth category, reported by 58% of respondents. On collaboration, the findings of this study show that 46% of logistics operators think road transport and shared transport space is an opportunity for collaboration, while 37% point to digital platforms and technology development. A third select distribution centres and shared warehousing, perhaps reflecting a need on the part of some businesses to optimise revenues from underused warehouse space. At 34%, the expectation for M&A in the next 12 months, which is obviously Jason's forte, and I'm sure he'll come onto it in the panel discussion, but that's at its lowest level since 2019, which reflects a number of factors, including higher interest rates, trading challenges, and a relatively short supply of quality assets at an acceptable price. Now, one respondent in the survey suggested they would only consider M&A with assets attached to any pending sale, assets such as freehold warehouse space or indeed land. 65% of operators expect significant capex on the next 12 months, down from 71% in 2023. This suggests that investment decisions may be deferred pending expectations of further downward movement on interest rates, noting the current rate is 5% and the next Bank of England rate decision is due on the 7th of November. Now, moving on to people, which I'm frequently told is absolutely key to the sector and one of the most important things. Now, 60% of firms anticipate no change in headcount in the next 12 months, and 12% expect to make a cut. So we think cost may be a driver here, as we've had a number of references in the report to the impact of national minimum wage and the increases introduced in April this year, which saw pay for 21-year-olds and over increase by £1.02 to £11.44 an hour. Now, difficulty in finding HGV drivers is once again having the biggest impact on business, particularly in the south and southeast, as I mentioned earlier, but there's also concern this year about the shortage of senior management and leadership, as James touched on. Recruiting and retaining of senior management is central to the challenge of succession planning, which is listed by over half our respondents as leadership and governance priority in the next year ahead. This illustrates the importance of identifying the next generation of industry leaders, particularly for family businesses, and attracting the best people into the industry. Now, improved pay and conditions is the most common strategy cited by logistics businesses to tackle the industry's talent and skills shortage, as it was in 2023. And it's an approach mentioned by Priority Freight's Andrew Austin, who joins us this morning, and we'll hear from in a few moments, who says that competitive pay packages, along with willingness to embrace changing expectations around work and life balance, are important factors in attracting and retaining staff. Our research also shows that working with younger people and introducing apprenticeship schemes is still an important strategy. And firms are also keen to improve the volume and quality of training for their people, with one respondent to a question simply responding with training, training, and training. And moving on to sustainability. Now, 7 out of 10 of our research respondents say it's the expectations of customers and suppliers that's the biggest driver of ESG activity, a theme which I know is dear to the hearts of Chris Welch of Welch Group, who will also be joining our panel discussion. Making a positive environmental impact is another key driver of ESG activity, listed by 66% of respondents, with corporate reputation also an important factor, up 45% on last year, and reflecting the importance of how businesses are viewed by stakeholders. Fleet operations comprise the lion's share of most logistic operators' carbon footprint, and our research shows that firms' sustainability projects are primarily focused on optimizing fuel use at 46%, and then decarbonising their fleets through alternative fuels at 35%. Now, battery-powered solutions rank the lowest at 19%, which one respondent flagged they felt that HDB charging could at least be 10 years away, which might suggest why it was ranked so lowly in the scale. Respondents called for a consistency of approach across the sector, together with incentives to support the transition. And we'll come on to government and the ask from them in just a moment. Measures to make warehousing more sustainable through more efficient lighting and power remains also a popular sustainability investment, with 45% of companies surveyed, and links in with the government target to have all non-domestic rented buildings to achieve an energy performance certificate, EPC level, B by 2030, driving that requirement. Unsurprisingly, cost is the biggest barrier to reducing carbon emissions, according to 70% of our respondents. And to quote one who suggested that customers were reluctant to pay for the additional cost of decarbonising initiatives, another popular discussion point. It was also interesting to note a number of survey respondents calling for an increased collaboration in order to work towards net zero, including the sharing of charging infrastructure and joint procurement to achieve improved pricing on ESG purchasing. And now we look at technology and AI trends. AI, of course, standing for artificial intelligence. Cyber threats against organisations of all kinds around the world continue to hit the headlines, including high-profile incidents which have hit a number of ports. So it's no surprise that many logistics firms say they will invest in protection against that danger over the next 3 years, a response that's up more than 20% year on year, with logistics providers now reliant on digital technology in so many areas, from vehicle tracking to APIs linking them with clients and suppliers. Any kind of disruption is likely to seriously affect operations, impacting both reputation and margins. The second most important area of tech investment, according to our research, is upgrades and replacements of existing technology, which could reflect an inward focus on operational performance and perhaps updating aging core systems. Artificial intelligence is in joint third spot. And another interesting fact for you, which I learned last week, is that the EU AI Act, got to put my teeth in, is the world's first comprehensive AI law in the world. Clearly, there's more to follow in this space, and our research shows that the majority of firms who responded to an open question on their specific investment in AI indicated they haven't and don't plan to invest over the next 12 months, with one respondent quoted as saying it was too early to invest, and they'd instead prefer to let others weed out the imperfections first. Now, while many logistics providers, as I mentioned, are still in a very early stage of investing with AI, several firms say they're already deploying the technology, including David Mulligan at DX, another one of our panelists to join us shortly. AI use cases quoted by survey respondents ranged from consumer interface chatbots, route mapping, monitoring energy usage and market insights, to reducing processing time and supporting digital marketing. As last year, cost has been identified as the main barrier to investment, with lack of in-house expertise coming second, noting a number of logistics leaders suggested they are now having to look overseas to recruit the requisite IT talent. And moving on to priorities for government support. According to the businesses in our research, the government has an important role to play in shaping the future of the sector and providing the conditions to support future growth. Noting one respondent called for the appointment of a Minister of Logistics. Unsurprisingly, the top priority for our new government is identified as lower tax burden to incentivise investment and growth. Investment in driver welfare and facilities is the second most important issue for respondents, which is said to be lacking far behind those in Europe and is seen as one way to tackle the sector's ongoing lack of drivers and to create more diversity in its warehouse. Now, one respondent in our survey was quoted as saying, training our own to boy to man. And I reflected on that and I thought, I wonder if ever this would change from girl to woman. Again, another topic to be approached at a later date, but that nearly half of respondents also want the government to prioritise initiatives to reduce skills and gaps. And the same percentage also want investment in road infrastructure. Survey participants have asked for greater government leadership on decarbonising the sector, with calls for the government to clarify the direction of travel in the debate about battery-powered electric versus hydrogen fuel as an alternative to diesel. With this, a net zero roadmap is on the priority list for more than 2/5 of logistics operators, which could support industry leaders with investments decisions in the future. Now, lastly, I just want to share with you some of the key takeaways from the report. And I guess what I would say is there are plenty of takeaways, and I would, of course, naturally encourage you to read the report in full, which will be made available in both PDF form and via our respective websites. But in terms of the confidence index itself, obviously, the main score itself is a huge number, the 57.6, which, as James mentioned, is the second highest result since 2015. In terms of the core drivers, it was cost control, efficiency, and increasing market share, which are the top strategic priorities. And collaboration also is a priority growth strategy. As I mentioned, cybersecurity and pricing pressures were also listed as growing areas, as were the availability of IT professionals, albeit again, HGV drivers top the list for main talent skill shortage across the sector. And lastly, 82% of logistics operators expect business conditions to stay the same or improve, showing there are expectations for improved trading environment ahead, and maybe even a record confidence index score. Who knows? But thank you very much for your time. I hope this section's covered for you the key themes and provided you with further context behind this year's result. And I'll now hand over to Jason from BDO, our long-term partner on this report, to lead the panel discussion with our esteemed guests. Many thanks.
Sorry, I'm just trying to get my video to work. There we go. Thank you very much. Thank you very much, Nikki, for that. And just to add my warm welcome to everybody to the call this morning. I'm pleased to be joined this morning by three panel guests, David Mulligan from DX Group, Andrew Austin from Priority Freight, and Chris Welch from Welch Group. It'd be great to get their views over the coming minutes, really. I will, in a minute, ask them to provide a short sort of introduction to themselves. Just before I do that, it would be great to remind everybody that please do post any questions you may have. There is a Q&A box at the bottom of the screen that you can type in any questions. It'd be great to get great questions from the audience so we can sort of feed those into the panelists. So moving on, I think it'd be great if each of the panelists could just turn their cameras on now, and we should therefore sort of fill your screen, hopefully. Great, thanks, David. Andrew. So it'd be good to ask each of the panelists in turn just to do a very brief introduction to themselves and their business. Can I ask David, do you want to sort of kick off on that?
Yes, good morning, everybody. My name is David Mulligan. I'm the CFO at DX Group. As a business, we're just about to enter our 50th year in 2025. And DX stands originally for Document Exchange. We were a business that was founded providing mail services to the legal industry. But in the last 10 years or more, the business has expanded out. We're a last mile deliverer of, in particular, IDW, things with irregular dimensions and weights, and parcels. We're an overnight service to the UK and Ireland, around about 500 million revenue. We were a name-listed company originally in 2014, but we've just recently been taken private by HIG Capital. That's me.
Thank you, David. Andrew?
Yeah, good morning, everybody. Andrew Austin, the Chief Quality Officer at Priority Freight. We are a privately owned expedited freight specialist operating heavily in the automotive section. 28 years old. We have offices in the UK and throughout Europe, but serve our clients on a global basis. I've been in the industry some nearly 40 years now, with senior roles in FedEx and Schneider before coming over to Priority Freight. And as a business, we are obviously operating in that expedited sector, as I mentioned.
Right. Thank you, Andrew. Chris.
Morning all, I'm Chris Welch, Managing Director of Welch Group. We're a good old-fashioned SME regional haulier. I'm fourth generation, so as you can imagine, over 90 years of operating, we've picked up numerous different parts of the logistics industry, warehousing, OEM, service dealers, and all bits and pieces. And now we're trying to wave the flag and push along with this whole decarbonisation flag, shall we call it.
Right. Thanks very much, Chris. Great. Okay. Well, sort of moving into the discussion then, I guess as we've heard, confidence index has come in at a very high level at 57.6 this year. That's the highest level for, in the last 10 years, with the exception of the post-COVID bounce year. It suggests there's a lot of positivity out there. It'd be good to get the panelists' view on your sentiment around the market. So David, I guess you've had a really interesting year. You've been through the public to private transaction. You've brought in your private equity investor. Things sort of relative looking forward. Things looking relatively positive for you at the moment.
Yeah, from a business perspective, yes, it's a time of under new ownership, and that feels like an exciting new chapter in the life of DX. Inevitably, with private equity, things don't stand still for very long. So we're certainly looking. We're a business with a growth agenda, but I suppose looking out into the marketplace, very much seeing the world through probably two lenses at the moment. On the B2B side of our business, I think there's a degree of resilience there. UK PLC, I think, has come through COVID and is trading reasonably well. Where we have seen some challenges is more on our consumer facing side of our businesses, and that's really reflecting demand from our customers who are facing into those markets. That's certainly been more of a challenge over the past 12 months or so. But in terms of outlook, I think it's a view that certainly that aspect of the market is ready for recovery, potentially with the interest rates coming down, etc. So looking 12 months out is very much an expectation that things will be better in 12 months' time than it is today, where certainly it's a challenging part of our business.
Yeah, I guess the market, as you say, and it comes across in the feedback that the market is still deemed to be exceptionally challenging at the moment, but it's that outlook for the next 12 months, isn't it? Chris, moving on to your thoughts. Obviously, you're in a slightly different family business, and you talk actually in your case study around a return to business as usual, and an importance of focusing on the development of new service opportunities, etc. It'd be good to get again your sort of sense for the next 12 months and how that is progressing.
Of course, Jason. So yeah, not to start negative, but I think, like I say, we're coming off the back of the COVID years, we're coming off the back of 2023, and whilst there's confidence going through the 12 months, as the index demonstrates, again, it's been a challenging time, and I think the marketplace has undertaken a bit of rebalancing, hasn't it? It's still carrying on now. So unfortunately, when I say business as normal, it's because volume has been put back into the marketplace due to, unfortunately, exiting firms and the supply balancing itself, which is normal market dynamics. So from ourselves in the Welch Group, what that's meant is, yeah, we've gone through a period of brace and belts, as we normally do over the decades, and we consolidated our offering, shall we say. Again, we have numerous arms to the business, so actually I took the decision to put everyone back together, make everyone a happy family again, as you said, Jason. And then, so look internally what you can do yourselves, what you're potentially not doing quite as well as you could be doing, and then look outside. So obviously looking outside right now, it's that decarbonisation space, isn't it? The government has those lines in the sand, 2035, 2040, 2050. They shouldn't move. We'll talk about our expectations of governments a bit later on. But that's what we're seeing. We're looking at decarbonisation, and having dealt with many customers for many, many years. I think they've transitioned, and all organisations and transitions through that, looking at scope 1s, looking at scope 2s. Everyone's done their solar arrays, everyone's done their LED lightings, everyone's looked at their products. And actually now we're finding that customers are looking at their scope 3s, they're looking at their supply chain. And what us and all operators need to think about, I believe, is you need to be ready to have the answers to those questions now or in the very, very near future, and have a solution in place for it, because there's little point in your customer coming to you in 6, 8, 12 months asking you for how to decarbonise their supply chain, and you having then to go off to research it. So yeah, we're heavily looking at the opportunities that decarbonisation would bring our business.
Okay, and you're right. We'll go. I'm sure we'll go on and explore that sort of what you're doing around that decarbonisation space in a little bit more detail in a few minutes' time. But just to give Andrew a chance to sort of chip in. And Andrew, I guess you're in a slightly a different position in that your business is a much more global outlook. You're servicing the global automotive marketplace, which has had its challenges, I guess, over the last few years. But it does appear that marketplace is picking up a bit. I mean, what's your outlook for the next 12 months?
I think, first of all, I think the confidence index report, I think, is a very rich report. Looking through, there's a lot of detail that we can draw from. But I'm also going to share with Nikki's viewpoint, as she expressed, there's a cautious optimism. Well, I think there's quite a significant uplift from the previous year's report. It's still fairly muted with a lot of conditions within it. So if we look at the index, I think we've come through the most turbulent period in the last 4 years, haven't we, really, with COVID, Brexit, with cost of living impact across the world. It's quite unusual that the world has suffered fairly universally these kind of challenges. So I think there's that cautious optimism. I think it's also driven by many people wanting things to improve, and we do see some of the indices reducing, but they aren't obviously to pre-COVID levels yet. So I think if I draw the global experience, the customer base we largely service automotive. Automotive is probably going through the most seismic change in its history over the last 100+ years, where they're changing or being asked to change the method of propulsion from diesel petrol onto electric or a form of hybrid. That's challenged them enormously because, as model cycles take many years to plan. And so they're also detecting that the uptake has plateaued somewhat from an earlier adopting position over the last number of years. So what we're observing really is that for one of the largest purchases outside personal homes, cars are not yet reaching those levels of purchasing because of the interest rates that still remain stubbornly high in some economies. And so I think there is an expectation that things are looking better than they were 2-3 years ago. But I still think with the geopolitical situation as well, there's an awful lot of caution around as well.
Thanks, Andrew. Yeah, I mean that point around cautious optimism is a point we stress in the report, and it's interesting you sort of make that point about there's almost a wanting things to improve background to that. So there's a hope element to that as well, I think, in that outlook going forward. And in the report, it's interesting that when you look at the level of expectation around the level of investment over the next 12 months, the level of appetite for investment has declined against last year. And I suspect that's an element of that caution in the mindset of, and still an element of uncertainty looking forward, and to a degree the sort of high cost of borrowing, etc. really. So it'd be good to move on and get your thoughts around your sort of investment outlook. And touching on that, the Labour government are meeting at the moment in Liverpool. they are trying to project a slightly more positive outlook as regards investment and support for investment, and have obviously sort of raised more around public sector investment, and hoping that that will filter through into more private sector investments. It'd be good to get the views of the panel as to one, what your sense is around your investment plans, but two, what you think the government should be or could be doing more of, you know, particularly with the view of the October budget coming up. You know, what can the government be doing to incentivise the industry to accelerate that level of investment? And maybe, you know, Andrew, as soon as you finish, do you want to kick off on that one?
I think on two levels then, Jason. One is the level of investment. As a business, we're investing probably more into our European and global aspirations than we are necessarily within the UK. It's still a very important key part of our industry, but the environment in the UK has become a little bit more restrictive, in particular in the last years post-Brexit, and with the transition to government, we wait to see what that environment's going to be like. I think if you look in the bigger picture, it's also significant. The report highlights the lack of M&A activity, which I think is either identification of proper acquisition targets, which I think will be an important thing to observe whether that improves, because I think the cash is there, that people are looking to invest. And we've seen that with some significant investments, you know, 14 billion investment, really with DSV looking at buying DB Schenker. So there's still some large activities out there. So I think our investment is going to continue to be in the people. Their expectations have changed of late, either through influences or through the impact of working at home through COVID, and that's changed how they look. So we're looking to invest in people, but I think the investment otherwise will have to continue into artificial intelligence, into the cyber protection, and so on and so forth.
Great, thank you for that, Andrew. David.
So from DX's point of view, we've come through a period of growth. So we're probably switching our investment focus a little bit away from our sort of site footprint, which we've invested in heavily over the last 5 years or more. But I would say shifting towards, I'd echo Andrew, into tech. And secondly, you know, the agenda that Chris has echoed is into sort of electric vehicles, charging infrastructure. That's another sort of, from an operational point of view, that's certainly we're rolling out across the business. Again, I'd echo Andrew's views on sort of investment. In terms of M&A, it's finding the right opportunities at the right price, and we may touch on that a bit later. But again, it's about investment in people as well, isn't it? It's training. It's trying to address some of that skill shortage which we highlighted in the report. So main areas of focus for us from an investment point of view is tech and leaning into the ESG agenda.
Yeah, and just before I move on to Chris, David, I think I'll let Andrew sidestep this. But have you got sort of any sense for the government? Do you think? Yeah. I mean, you know, clearly the tax incentives is top of our list in terms of the respondents. What would be your thoughts on? Certainly,
from having a direction of travel, we all recognise, you know, we're going through the EV versus hydrogen debate for some of our HGVs. It's perhaps a direction of travel and how they're going to support, whether it's research programs or certainly from an infrastructure point of view, if they're going to go down one route or another, some sort of national support for some national infrastructure. Probably some of the more sort of call them mundane, but things that make me nervous is minimum wage. That we've seen some significant hikes in that over the last 2 or 3 years. That puts a huge amount of pressure on the business from a cost perspective. So I think a more modest rise would be welcome, particularly as well as trying to tackle the inflationary environment. Certainly a lower inflationary environment and leading to a lower interest rate environment will be, I'm sure, welcome from everybody. And I think the last point is slightly, probably a slightly more oblique point, is obviously they've set out their agenda for housing, just getting housing activity going, getting the housing market moving. That has a benefit for us in terms of, you know, goods then just get moved around the country, and I'm sure that benefits us all again. So sort of delivering on what they said they're going to deliver on,
Yeah.
getting on with it after a bit of a hiatus around the government, around the election rather. So yeah, so a hope of just getting on with things and not keeping national minimum wage going at a high level. This year, I think, is just going to feed inflation, and it will remain stubbornly high if that happens.
Yeah. Okay. Thank you, David. Chris, do you want to sort of pick up on the investment side from your position?
So from group position, M&As, we've always run the models that we have an own outright policy, shall we say? So it lets us weather many storms. So our outlook is, at the end of the day, I can spend what we make at the end of the day to a certain extent, quite naive, quite basically. So we'll see where that leads. But again, like we touched on, like David touched on, the capital costs of this next wave of technology vehicles, what you're having to do to your sites, the investment required is eye-watering in some aspects. So everyone is actually going to have to review their model regardless of how they've operated for 10, 20, 30, 40 years at the end of the day. So we're going to try our hardest to continue to reinvest in what we're doing, but that only comes out the back of what we're achieving, shall we say. From a government point of view, what I'd like to see, again, I echo David and Andrew's points. From an ESG point of view, they need to show us that roadmap. We need some clarity on which way we're heading. Like I said, the main contenders are battery electric or hydrogen. There may be a silver bullet that arrives, but it's not going to arrive anytime in the next 5 to 10 years. And you look at what's going on out there in the innovation space and the investment space, and it kind of contradicts itself. Most people are concentrating on electric and electrifying their fleets, and investing in infrastructure and charging infrastructure. However, you look at where the funding's going, and the funding's all going into hydrogen. So there's a bit of a disconnect there between what people are looking at and where the investment's going, in my eyes, anyway. So that we need clarity from the government about where we're going and where we're heading. And you need to pay attention to what's happened in other industries. Andrew touched on the car industry, electric, hybrids. The bus industry has already moved. The LCV industry is moving, all electric. So there's some synergies to be had there. Outside that, digitalization and automation of the logistic value chain is key, and I think that will be a big driver in what they look at and the way we innovate. Then lastly, again, from an ESG point of view and from the vehicle and tech point of view, we need to understand things like we need some direction on weights and measures on pieces about operating these vehicles, regardless of how they are powered. How are we going to operate them? Can we increase the axle weights? Can they work with the DFT of the highways and figure out a roadmap that's going to give us some answers in the next few years, as opposed to waiting till we get to 2035 and we've got to be making hard, fast decisions?
Good. Thanks, Chris. I think I may have lost my connection a little bit in there, so I might have missed a little bit in there. But it was a natural link in to talk about the decarbonisation, sustainability, and ESG agenda, I guess. And interesting, you talk about that roadmap, but you are investing a lot in that decarbonisation element, aren't you? Because you talk in your case study about that investment, and you've mentioned the E-Freight 2030 as part of the government programme. Do you want to talk a little bit around that?
Yeah, obviously, again, one of the biggest, ZHID is the bigger, as it's termed now, ZHID is one of the biggest Innovate UK government investments in anything, I think, £200 million going across 4 consortiums. And we're lucky enough to be involved in the E-Freight 2030 programme, which is putting 100 electric Arctics across the UK and facilitating 32 32-ish megawatt charging hubs, which it's a great piece. It's a great story. It's all going into plan. Like I say, obviously this only got announced 12 months ago now. So the whole idea, the name comes from E3 2030, is that it will demonstrate this until 2030, where all the reports will be published. But there'll be numerous pieces of information fed as it grows. There's initial steps, as with anything, if we come back to digitalization, the initial steps of the consortium have all been around the partner Dynamon, looking at taking our telematics, looking at years worth of data, what our diesels are doing, where they're tramping, where the customer base is, where the supplier base is, and modelling it, doing a hell of a lot of modelling. We've identified that we've got 20% of our fleet viable to be transitioned to electric today, with with one strategically located charger in the Midlands. We could move that to 40% of our fleet, and that's just that whole piece where you're just taking electric out, taking a diesel out and putting electric in, and not actually trying to change the supply model. But no, it's going to plan.
And that's working, Chris, with the infrastructure that's in play. That challenge around battery is always that electric is around. Can you do the recharging on as you're tramping or moving around the country, really?
It is exactly, Jason. So and that's why this consortium and all the consortiums have to facilitate that infrastructure piece. David or Andrew mentioned it earlier, and sorry, Nikki did as well, that the worry is that the infrastructure isn't there, and we all go back to the car world and the car days when 2 Christmases ago we saw on the news Teslas queued up down the motorways because no one could charge. And when you don't want that to happen in the supply chain, do you? You can't have lorries queued up down the M6 trying to charge. So we have to facilitate that charging. And we'll come on to that journey a bit later on of the importance.
Yeah, no, it's quite interesting, isn't it? I mean, when the report again picks up on collaboration, and ESG is one of the, as Nikki said, it's one of the key areas that's highlighted as an area for more collaboration to make the infrastructure work, really. You're
right, Jason. Actually, that's one of the biggest takeaways from the consortium, really. All the consortiums, actually, all the consortiums are working together as well. Grid Survey, Freight, all the ones they're collaborating. But actually, within our consortium, we're collaborating. We're collaborating Maritime and Stove Arts and all Kuehne+Nagel, all the other boys and girls that are in it. And part of the remit is you must allow trucks onto your site to charge as part of the consortium. Yeah, which is probably a piece of collaboration that's never ever taken place in the industry. Tier 1s, Tier 2s all work together to make a brighter future, shall we say?
Exactly. Yeah. Great. David, I mean, on that ESG agenda, again, sort of picking up on the comments that come through in your narrative in the report, you reference a key focus on helping your customers with their commitments to ESG. Do you want to sort of expand a bit on how you're doing that?
Yeah. So as Chris highlighted earlier, we're scope 3 for many of our customers' supply in their supply chain. We're a key part of their carbon footprint, and a lot of we've seen within the last 12-18 months, the regulatory and reporting environment is impacting initially a lot of our larger UK corporates, and consequently, as part of their supply chain, they're coming to us seeking better quality data, looking to measure more accurately their own carbon footprint, and that comes down to provision of information on a per item or a per consignment basis. So we have evolved our own data capture and data reporting in the last 12 months to help those customers, and we're seeing a lot more engagement from them. Certainly customers looking to us for things like EcoVadis scores and how we're going about improving them. So we're very much part of a journey to feed in from a reporting point of view. At the same time, we then also engaging in our supply chain, who I think is certainly obviously a larger number of smaller entities, perhaps a lot more immature in terms of their own ESG agendas, particularly around environmental reporting. So a lot of it is also taking them on the journey with us, helping them to improve their own reporting and to highlight, try and draw out some of the things they're doing in their own businesses. So it's interesting now with that, you know, I think the industry, particularly as we have a significant carbon footprint as an industry, that we're interfacing both upstream and downstream with our customers and our suppliers. So I think we've got a crucial role to play. And always it's improving the quality of your data, because if you can measure it, you can manage it. So
Yeah,
it's a good old adage, but yeah, that's been a key area of change, particularly in the last 12 months.
okay, thanks, David. I'm conscious of the time as we sort of plough through this. So, Andrew, sort of moving on that a little bit. One of the big themes that came out of the report was around the investment in cybersecurity. You know, it was an area that has been highlighted as a top priority and has sort of come from somewhere which wasn't really on the agenda last year. And I guess with David mentioning about sort of data and so on, protection of that data is, yeah, really important. Andrew, you've invested a lot in your in-house technology. You know, it's the bedrock of your sort of service proposition, etc. So again, I'm guessing so cybersecurity must be high on your agenda of things to consider at the moment.
I think it is. I think it's front and center most of the time, Jason. I think the world is a much more intense place when it comes to the transfers of information, and therefore with people accessing the means by which they can interrupt that on a greater levels, whether that's at an individual level wanting to disrupt something for their own reasons, or a sovereign state level wanting to make some impact on a geopolitical level. The fact is, I think I describe it often as a war. We're in a war, we're in a campaign. You cannot drop your guard on this at any one time. You're constantly investing in greater firewall protection and safety and security. You're looking to identify the threat profile. And we've seen a number of high profile impacts on that over the last number of months and years, haven't we, in terms of large organizations being affected by some form of insertion into their system, which has caused them some difficulty. So it is something that's never going to go away. In fact, we're going to have to continue to raise the level of security and awareness and ensure that there's safety. And it's going to bring more interruptions into business as we ask people to verify themselves and our customers. Yeah. So I would say that it's front and center, high profile. It's not going to go away, but it has some material damage as we become more and more reliant on technology. So I think shields up all the time, I think, is the answer.
Yeah. And David, we've asked a lot of questions this year about use of AI, and interestingly, you know, we asked an open question for the report this year around, are you utilizing AI and to what extent? And, you know, there was a mixed response. There was quite a large number who said, no, we're not investing in that area at the moment, but it is an important space. Again, we're seeing that development come through. And I think as a business, you're investing quite heavily in AI tools around efficiency.
Yeah, so we've taken our first steps as we were sort of getting the technology out of the box. And we're looking in one specific area to deploy some machine learning. We have as part of our sort of GDPR, we deliver to a doorstep. We will often take a photograph of the delivery. You know, many of you will be familiar with that. But for us, from a GDPR point of view, we have to be extremely careful not to retain facial images, personalized information. At the moment, that is a very laborious process. It's done manually. Each depot reviews its proof of deliveries, but we're looking to do some machine learning where those images are reviewed by AI technology to try and filter, at least highlight those items that we shouldn't be retaining. So that's just a simple example of where we're looking to deploy some AI technology to, you know, which is a very labor-intensive process at the moment, to use tech that can do it very quickly and very efficiently. So that's just one example. And the other area we're looking is also around route optimization. We're clearly there are some using the intelligence of mass data analytics to better plan our activities.
Thank you, David. Yeah, just briefly then on the ESG agenda, I guess a big part of that is the social aspect. It's the people. It's putting in the right structures, etc. When we look at the people challenges, HGG drivers still come out top as the biggest priority or challenge in that space. But increasing prioritization, is looking at accessing and developing skills across leadership and IT. I mean, I guess Chris, as a whole, drivers is still a priority, but that leadership piece is in succession is still a huge part for the family business.
Yeah, I have to put up my siblings. No, it is very important, and you've got your two factors there. You've got your technology, and like you say, you've got your people. And I suppose our best example in-house, and we actually, I think Nikki touched on it in the summary, people needing the in-house expertise. We've gone from having no head of IT to having a head of IT a number of years ago to make sure that your eval was working, your firewall, your basic firewall back then was working, to actually now having a head of solutions. And it's like David said about data. Data is key. It's about taking all those streams, all that information, or everything that's going on, and piecing it together, merging it together, making it into a whole. You can't just look at things in isolation anymore. And that also then in turn facilitates that managerial piece that we're talking about, ensuring that you have a structure around you, that your business is structured in such a way that you're looking after your staff and your people. Because whilst you're doing that from an IT front, you do that from a driver trainer point, and you do it from a mental health awareness point. So there's a lot of different touch points about looking at how you set up your business internally.
Right, thanks. Thanks, Chris. We've got just a few minutes. There's 3 minutes left on the clock, so I'm conscious that it's been a very flying visit to some of the sort of headline issues across some of the headline issues that are coming out in the report, and I haven't even had a chance to delve deeper into my pet subject of M&A and activity levels and consolidation in the marketplace. But just very, very briefly, in terms of sort of, if you summarise your sort of outlook for the future, Andrew, what would be your sort of headlines for sort of bullet point priorities for the future and expectations?
I think it's based on a little bit of a look back. Those turbulent, particularly the last 4 years, have made us always working in this industry, which employs almost 1 in 7 people. If you look at the broader supply chain in the employment sector, is that we've learned to become more nimble, we've learned to become more fluid, we've learned to adapt to change. And I actually think that pace of change is going to accelerate, whether it's understanding the rapidly changing influence of AI, or whether it's government legislation, it's the global economy. So my big takeaway is that when we talk about our leadership, when we talk about ourselves, is a constant investment in a broad base capability enhancement. This is being nimble, being adaptive, being reactive are some of the key challenges we're going to have to continue to be. We already are, but I think that's going to accelerate.
Thanks, Andrew. David, I guess echo a lot of that.
Yes, and I think one of the things that came out in the survey was customer expectations and competition and pricing pressures. I think for me, the big focus for the business over the coming 12 months, being close to our customers, providing them with good customer services. Don't give them an excuse to look elsewhere unless they really push you hard. I think also then is people and resource. I think that's echoed through. Looking at welfare facilities, we're trying particularly hard at the moment to reduce the level of turnover and churn in our business. We're a business at certain parts of our business with high levels of turnover, just because of the nature of what we do. So yeah, trying to improve facilities and conditions and pay for our colleagues. So That's
Thank
probably two big areas for us.
Yeah. And Chris, anything you want to add?
Yeah, okay, what David and Andrew said, I think in two aspects. First is obviously we're going to continue pushing the innovation, the decarbonisation space, because it's a unique USP for ourselves personally. But with that, what that brings is the need for collaboration. We've mentioned it throughout today, and in the report, in the index, is collaboration. And it's actually collaboration where you think it was never there before, or where it could be in the future. Just because you've never spoken to that person before doesn't mean actually there's not something there. So yeah, collaboration at the end of the day is what we're all about.
Thanks, Chris. Great. Well, on that note, I would like to draw things to a close. Firstly, I'd just like to thank the panelists, not only for today's contribution, but you've written some great case studies for the report, and I hope people take those away and enjoy reading those. Thanks to James and Nikki. I'd like to thank Analytica for their sort of work conducting the whole survey. And finally, add my thanks to all the respondents. It's you who joined the call this morning. Without you, we wouldn't have the quality of and in-depth insights that we can pull out through the report that we are presenting. The report will be available. We will send the report out to everybody who's joined the call this morning. The report will be available on Barclays and BDO websites at some point later this morning, and there will be a recording of the webinar for anybody who wants to review that at a later point. And again, that should be available on our respective websites within the next sort of 48 hours. So on that note, it's just my thanks to everybody, and I wish you all a happy day. Thank you very much.